The markets may be jittery, but our commodity charts are brewing with signals. Welcome to Commodities with Investing Angles, where every trend gets filtered through candles and every wave counts. Here, what's on the burner today? Natural gas, finally showing trends. Is this the start of something big? Oil, leaning down like it's carrying too many bearish barrels. Uranium stocks, falling fast, just as we projected. Hope you weren't glowing with optimism. Gold and silver, technically bullish, but we are digging beneath the surface. Palladium, full of concerns, full of warning signs. And yes, coffee. Should you expect cheaper refills at Starbucks? Whether you trade metals, energy, or just love your morning cup, this is the breakdown that keeps your edge sharp and your trades one step ahead. And we start today with natural gas. So what we are seeing here is the Friday's closure, and it's fairly optimistic. First of all, the daily candle is clearly bullish, moving above quite a few support lines, and also the 3-day frame closed with a very strong bullish inside up candle. On the weekly frame, we have a very strong piercing line, almost a bullish engulfing. Everything is good, and I'd like to remind that last week we spotted a very strong failure to extend the bearish odds. Now we have a reversal. So now let's have a look at the chart. What we are seeing here is the chart that we discussed for over a week, and this is what it looked when we projected potential bottom. So far, natural gas hold this level 3778, which we deem critical for the rally, and right now we are seeing a potential impulsive wave upward. However, it's not clearly impulse here, and it could be a motive wave, potentially a leading diagonal, either with counts 1, 2 in purple or alternative 1, 2 in red. So once we clean this hurdle, natural gas is expected to fly. So that's the perspective, and as you can see, natural gas remains firmly bearish across all time frames, and I like to emphasize that it also happens on the monthly frame if there is no strong sellout on Monday. With strong prospects of closing March with bullish signals on both the monthly and quarterly charts, and the outcome that we would further reinforce its upward momentum. From Elliott Wave perspective, natural gas continues to develop a solid long-term impulsive structure. However, the short-term picture remains uncertain, and the 3.778 level stands out as a critical threshold to monitor closely. Interesting that the recent price action closely mirrors the 2001-2002 period from technical perspective, and this is what we are seeing right now for natural gas. Now let's move on to the next commodity, which is oil. So this is quite the opposite picture, I would say. First of all, a reversal here, a confirmation of reversal on a Harami cross, bearish Harami cross, and it looks like this finally the 50 over 100 day moving average cross took its toll, and right now oil is bearish for Monday, at least for Monday. On the 3-day frame, it closed with a dark cloud cover and a big hammer here, which is also bearish. So should this be confirmed on Monday, Tuesday, Wednesday, this would be a big reversal. And speaking about the weekly frame, bulls needed to close about 70.375. However, they didn't, and this is a triple failure right now. So this formation is a good setup for falling 3 methods. So if we see another red candle similar to this one that I'm showing right now, the next one will be extremely strong move down and the continuation pattern. Speaking about the long-term perspective, mid to long-term perspective, our chart remains the same as we outlined it to those who were with us since December, and this was our chart when we said that oil is expected to move higher into this rectangle, and after that it will be moving lower towards new lower lows and perhaps beyond. This is exactly what happened. This is the original rectangle that I kept here for reference. It reversed here in the middle of January, and since then we are seeing a big move down. So far, it looks like oil formed a very strong bearish flag, and right now it is falling down, and I'm expecting it to move towards new lower low below the low of May 2023. That would be our target here, is about $60. That's an approximate one. We'll see, maybe we'll refine it a little later once we have a bigger and better structure. By the way, if you're interested in the short-term targets and the wave perspectives, we encourage you to log into our website investingangles.com. Today we released oil weekly report, and it has all information, much more than I'm talking about right now. And the final one is the technical perspective I would like to emphasize here. So this is the quarterly closure, quarterly candles, and what we are having here is that oil is under the bearish MACD, bearish quarterly cross. So, and that it looks like it's going to be expanding no matter what, and the formation here, candle formation, is bearish, and I would like to say that this is going to be the third consecutive closure below the 20 EMA quarterly line. And I would say that in order to make a reversal candle, or at least to mitigate the bearish odds, oil needs to rally about 12% on Monday. In this case, it will transform the currently bearish candle into a bullish one with the perspective of higher prices. Well, 12% in one day, let's say it's impossible. So, speaking about oil, Friday's candle formation capped the recent rally and confirmed the top on the daily chart, extending bearish momentum to the 2-day and weekly time frames. Oil remains firmly bearish, with no clear signs of reversal on the mid or long-term charts. This stance is unlikely to change with the upcoming monthly and quarterly closures, unless a significant rally occurs on Monday, and I'd like to emphasize it needs to be over 12%. From the Elliott Wave perspective, oil appears set to continue its decline after completing a bearish flag formation. If the current micro setup holds, a downward acceleration is likely next week. Overall, the outlook remains bearish with strong potential for further downside. And the next one, we will be talking about uranium stocks. All I'd like to say, if uranium investors listened to us 2 weeks ago, they would probably be happy. Anyway, let's evaluate several stocks. So URA, the first one, the daily closure is firmly bearish, and there is no signs of reversal yet. The 2-day frame is also bearish, and I would like to emphasize this particular double cross or even triple cross. So the 50 and the 100 days moving averages crossing the 200 days and 50 over 100 crossing themselves. So this is very, very bearish long-term technically. For the weekly frame, it's a strong bearish engulfing, crossing below the 200 weeks moving average. And the monthly frame, it is on track for a strong bearish closure, unless some miracle happens, of course, on Monday. But we will be looking for the price closing below the 50 months moving average, and also 8 by 20 EMA bearish cross is on track to happen on Monday. Well, it's just 1 basis point apart. Now let's have a look at the next chart, which is energy fuels, Quad U. Just 2 weeks ago on March, we said that the flag is about to complete and we would be looking for the next move downward towards 3.30, 302. That's our target, and guess what? It is happening right now as we speak. So just 2 weeks after, and since our call, energy fuels already lost 9.5%. Well, there is a good chance that the move will continue downward. And speaking about the bigger frame, that's the chart that we shared. We made it on December 19, 2023, and this is how it looked. This is the chart, December 19, 2023, and since then we practically didn't change it, made more minor modifications, and I'd like to emphasize that energy fuels are down 50% since that initial chart. So right now it hit precisely our target 3.77, which we outlined earlier this year in February, and right now it looks like it is going down, and I wouldn't be surprised if it hits the lowest target here, or maybe even goes beyond. That's the perspective. And what if we look at the candles are fully supporting it. Daily candle is closing with a strong bearish continuation, a very strong bearish engulfing on the weekly frame, and the quarterly frame is just plain ugly. This is a very strong continuation candle, and we have an 8 by 20 EMA bearish cross on the quarterly frame. So if we look at the bearish cross 8 by 20 EMA, so the last time it happened, well, we need to scroll it here. This is the last time it happened, somewhere probably here in January in 2009, 2010 approximately. We don't have enough data line for the particular cross. And after that, I would say that energy fuels lost about 80% of its value. Well, after this cross, if they lose another 80%, that would be something. But anyway, the chances of moving lower are significant. So the next quarter will likely be bearish. Now let's have a look at Cameco Corporation. What we are having here, a strong bearish move on this after bearish engulfing on the 3-day frame and the continuation candle on the 3-day, a strong bearish engulfing on the weekly. The week started brightly, and I would say that at some point I was thinking, oh well, that's probably a good reversal because it's gonna close about 44.75, but something happened in the middle of the week and Cameco lost a lot. Now it's a bearish engulfing on the weekly below the 100 weeks moving average, and we are seeing a very strong monthly closure. The quarterly closure is going to be bearish, period. Because in order to reverse the odds here, or at least mitigate them, Cameco needs to rally about 20% in one day, the remaining Monday, which is plain impossible. Now let's have a look at the Elliott Wave chart. This is the perspective that we kept since when we kept it? Since March. This is the March 14th. So far, the chart is looking as we expected, potentially closing on wave 3. Then it will be looking for wave 4 and 5. So we are going to be below, looking for targets below 30. That's the perspective, and it is fully supported by candles. So far, uranium is bearish, strongly bearish, and across all time frames, across all candle frames, and with a very good support technical and Elliott Wave perspectives. So if a reversal happens, well, that would be a surprise. Now let's move on to let's wrap up on the energy part and let's move on to the next one, to the precious metals. And we start with gold. So what we are seeing here, bright future. All candles are bullish. Everything is bullish as far as the eye can see. Daily, weekly, monthly, quarterly, everything. But the caveat is that we have very strong problems with technicals. All of the frames up to the annual frame has been overbought strongly, and this is a very serious concern. So just a couple of hours ago, I posted the weekly update on gold, and there was a small statistical study there about MACD and the perspective for the cross and the potential implications for the targets. So if you're interested in seeing this and what could be the impact if we see a strong bearish move, this is a must read stuff. So now let's have a look at Elliott Waves. This is a little concern that we have today. So early in the morning, gold spooked everyone and formed an impulsive wave down. And it spent the entire Friday trying to negate it. So it came very close, just few basis points below the nominal top, moved down and made another wave up. And again, it wasn't able to close it above this potential top line. So now if we see a big gap down on Sunday upon opening and an impulsive structure down, this could be a very, very big signal, potentially forming in 1, 2, 3, 4, 5 impulsive wave downward, which would be a very bearish structure. Speaking about the bigger picture, so the wave that gold has been forming since the middle of November, I still cannot unsee the bearish structure, the corrective structure of this wave. So first of all, the wave 1 is not impulsive at all. Wave 3 has so many overlaps here, here, and there is no clear impulsive wave, which would be the middle part. And the final wave, well, it's technically a very nice impulse, but the question is, what is the structure of this? I'm thinking that this is potentially a leading diagonal or ending diagonal. In any case, it is going to reverse somewhere towards the level of origin. And these two candles here, closing above the line, above the imaginary channel or diagonal line, could be just a bearish island. If we see a gap down on Sunday and gap down and go, it would be a confirmation of an island and potentially a strong move downward. That's the perspective from Elliott Waves. And speaking about XAUUSD trust that we usually look at together with gold, so this could be a spinning top or an evening doji. Well, evening star doji. Let's see if we see a gap down again on Monday and the move down, the red candle here, it could be a confirmation of a top, at least a local one. So far, the 3-day candles and the monthly candles are looking solid, and the weekly one also closed at a solid bullish continuation candle. I'd like to emphasize though that gold has been, GLD has been overbought as well as gold. So gold closed the week and many other key time frames with bullish candles. From candlestick perspective, the odds remain bullish. However, a growing number of technical indicators are flashing warnings, pointing to the possible proximity of a major top. In today's report, I presented the statistical estimate, but just one statistical estimate, and this report is available at investingangles.com. But several others align with it. Gold appears ripe for reversal, and it may need now. All it may need now is a trigger and a decisive candle to confirm it. Just one example, a drop of around 4.2% on Monday would immediately flip the monthly outlook bearish because of the candle formation. But this would be an extreme move by any standard. Still, if a reversal is coming, it's more likely to unfold in a moderate, more measured fashion. On the micro level, there is a risk of a larger impulsive wave down development. If gold follows through, it could mark the beginning of a substantial decline. For now, all trends and odds remain firmly bullish, but the risk of reversal has increased significantly recently. That's about gold. Now let's move on to silver. Let's see what silver candles and waves are telling us. We start with candles. It looks like silver is more decisive than gold. So far, this candle is an incomplete dark cloud cover. However, it has very good chance of a confirmation on Monday. So if we look at the 2-day frame, so it's technically the same. The weekly frame is a little failure because in order to negate this red candle, it needed to close above the high of this candle. However, it didn't, and it might be significant. Let's see how it develops next week. So far, it's just a little risk. And the monthly frame so far looks bullish. However, I would like to say it's very close. If it drops just a little bit on Monday, well, little bit is about 2%, and closes below the February high, it will be bearish. Now let's take a look at our bigger chart. So far, it's been on track since December. What we are looking for, two potential closures. If silver makes it to the red rectangle, it will be a bigger, potentially bigger wave C of B, or if it fails, it could be wave B here. So far, it didn't make the higher high, and the blue path is on the table for now. Speaking about the short-term frame, silver made a very nice impulse, and it is stronger and more substantial than the one that gold did. This is the impulsive wave that started at 6 a.m. today, Pacific time. And what we are seeing, classical waves 1, 2, 3, 4, and 5. Wave 5 breaks into another impulse. So far, this wave could be a corrective, but it also could be an impulsive. Let's see how it develops. If silver doesn't make a 5 wave here, then we would be looking for a corrective action. So in order to make an impulse, it needs to do something like this. Let me mark it with a different color so that we clearly differentiate it. So if silver makes something like an ABC and reverses here and drops strongly, then it would be a potential for a bigger impulse. If it goes higher, especially if it makes a new higher high, then it will be a continuation of a rally. And our midterm chart looks like this. So we've been talking about for several months already. This wave here, potentially wave C of 2 or of wave B, has been a diagonal, and this is a concern. If it doesn't make it above 34.863, there is a good chance for a very strong impulse down, which we will consider as an 1, 2, 3, 4, 5 formation. Well, so far, let's see how it develops. And right now, silver at a critical point, at an inflection point. It still has a chance to form a bigger diagonal, 1, 2, 3, 4, 5 in green count, because this one, the wave here has been corrective, and well, this is also on the table. If silver decides to move this way, it will take another couple of months until this diagonal completes. That's the perspective for silver. Speaking about SLV, it on Thursday it overcame this bearish engulfing with a strong green candle, but only to make a dark cloud cover on Friday, which is another bearish concern. The weekly frame wasn't entirely bullish, and the monthly, we already discussed it with silver, so technically this one is aligned. If you're interested in the charts for SLV, a midterm chart, I will be posting it in as part of our silver weekly report later today or tomorrow. That's it for silver. As you can see, silver is still deciding. It has certain risks, but so far there is no clear confirmation. Now let's speak about another one, Palladium. Palladium is also one of our favorite charts that we yesterday, if you watched our daily video, we discussed wheat, and today we are discussing Palladium. So this is the chart that we made in May 7, 2023. And we said that Palladium is poised to move towards these levels, drop below the 1000 when it was 1500. And so far, this chart has been working nicely. So this Palladium hit here, what was the low? 809. And after that, it tried to bounce here and even tried to make an impulsive or at least a motive wave. However, unfortunately, it wasn't able to extend the rally, and right now would be looking for a bearish continuation here. So this potential bottom didn't work out, so it was I was treating this as a diagonal. However, it didn't get a confirmation, and this wave that starts here is far from being bullish, particularly as we would expect for wave 3. So this count is most likely is going to be invalidated. Instead, we would be looking for 1, 2, 3, 4, 5 here. And speaking about this wave, I would say that there is a very good chance that this wave morphs into some sort of ending diagonal, and I would be looking for something like this. But let's see. It's so far this wave 1, 2, potentially 3, 4, and 5, and it might take a couple of years if we look at it, and this would be the red count. 1, 2, 3, 4, 5. So that's it could be sharper, but that's the perspective. I don't think that in this case it would go much lower, but anything can happen. Well, that's the perspective for now. And speaking about the candles, what we are seeing here is the very strong closure of the day today with a hammer. And I'd like to emphasize the rejection at the 200 days moving average. And this hammer is also a bearish harami. So the chances of a move lower are fairly significant. Speaking about the weekly started very nicely, but failed to close with a bullish candle. And the 8 days frame, which is closing on Monday, is a fairly clear setup for falling 3 methods. If it stays like this, I would expect another candle down below 900 for sure. And speaking about monthly, so far this setup is bearish, and if you look at the 3 months frame, so it had a chance to form a bullish engulfing or inside up candle. However, it looks like it's gonna be a neutral bearish formation, neutral bearish closure at the 3 months. So that's the perspective for Palladium. As you can see, it so far it is failing to form a bottom. And the final one for today is coffee. What is coffee telling us? First of all, this is the 3-day frame, which is a strong bearish engulfing, and we had a strong tower top formation here, an attempt to negate it, and now we are looking for a bearish continuation. If we look at the weekly frame, it's most likely these last 4 candles were forming a flag, and the chance for going lower are significant. If we look at the weekly frame from another perspective, this is a technical perspective, right? So this is a MACD bearish cross on the weekly frame. And I'm just showing you the whole picture. This is the cross which already recorded, and it is by far, by 85% bigger than the previous one. This is a very extreme concern, I would say. And the 3 previous crosses of somewhat similar, the 3 biggest ones, they resulted in the losses of 45, 34, and 45%. So if this is the case, then the average is about 40%, and we would be looking for approximately this level, 260. For right now, it is 380, 260. Well, that's 40%. The worst case scenario, if we consider the magnitude of the cross and we just multiply it plainly, then we would be looking for 85%, 83% loss, which would be somewhere here. Like coffee at $73. Well, that would go nicely with the Starbucks cup of coffee. Well, that's the technical perspective. This is something to keep in mind. So this is a very significant cross, and I don't see it is reversed very soon. Now let's have a look at the other frames. So this is the monthly. What is interesting here with this candle formation? So I think that no matter what it does on Monday, it will be bearish. This is like a catch-22, or between the rock and the hard place. This candle will be bearish. In order to make it bullish, let me estimate. Coffee needs to rally about 15% on Monday. Well, I would say it's next to impossible, or maybe just impossible. And don't forget that coffee is grossly overbought on the monthly frame. Well, that's the perspective. No matter how it closes on Monday, it will be bearish Monday, bearish monthly closure. And once we have this technical setup, candle perspective, let's have a look at the Elliott Waves. So what I'm seeing here is that Elliott wave that started in January 2023 has been corrective. So the first wave of the bottom is clearly a 3-waver. There is no way it's gonna be a diagonal or a 5-waver. So this sets the character of the entire wave. And it doesn't matter how we slice it. So this wave that I circled is also corrective, and this wave has been also corrective. And there are so many overlaps, it's impossible to make wave 3 out of these. So whether I place a count as 1, 2, 3, 4, 5 in blue or in green, it is an ending diagonal. Both are valid and both are very concerning. So what we know about ending diagonals is a return to the level of origin, 142.73. So my estimate at this point is this could be a wave, something like an ABC zigzag, and that would land somewhere between 200 and 145, depending what kind of wave it is going to be. And our estimate on the MACD cross an average one, it's 260. It's right here. So maybe it's going to be just wave A of a bigger structure. So that's a very concerning coffee picture, and I hope we can see cheaper coffee at Starbucks. All right, so from uranium meltdown to natural gas breakout potential and the subtle whispers beneath silver and gold's shine, today's commodity story was anything but flat. Natural gas is stepping up, oil is losing steam, and palladium, well, let's just say it's not on our morning buy list. As for coffee, if the technicals hold, Starbucks might finally owe us a discount. What do you think? Is natural gas leading a comeback? Will metals hold their shine? Drop your thoughts in the comments. If you like what you saw, hit that like, share this with your trading circles, and subscribe so you're never late to the move. For deep dive Elliott Waves, precise candle reads, and reversal setups across all time frames, visit investingangles.com. We specialize in seeing the turn before the herd even blinks. Until next time, stay caffeinated, stay calculated, and as always, happy trading.